All right. Good afternoon. Right. So clearly, I'm not home right now. I'm actually in Monaco for the week. I'm doing some work visiting my brother here as well. But inflation news came out earlier this morning, an hour ahead right now in Monaco. So I thought I'd jump on and provide a few thoughts around what we're seeing right now. So if you followed the podcast on Monday, I spoke about the fact that the forecast for inflation that they were going to be reporting today was going to be somewhere between 4.8 and 4.9%. And good news, obviously, it's coming much, much lower than even those forecasts and the consensus thought. So 4.6 is a significant reduction from where we were, which was 6.7. And bearing in mind that the history around this is that we've seen for the past 2 months inflation be pretty much level stagnant at 6.7. So this is a really, really big, significant drop, 2.1% drop in inflation. Now, a lot of that is accredited to the fact that energy prices have clearly eased. That's a huge function. So this is good news all round. But there are a couple of things that I do want to talk about on this live very, very briefly. The first one is what's going to happen to interest rates, because that's obviously going to be the next, I guess, logical question. Secondly, what does this look like in terms of real world? I mean, it's great that they're saying that it's fallen to 4.6%. However, I don't think people will feel as though inflation has fallen. I think people day to day will still be feeling this when they go and do shopping at Tesco's or Lidl or Waitrose or Aldi, right? So let's have a look at a little bit around what it actually means around the where this inflation is still coming from. Because remember, the target is 2%. But because we've seen a reduction from 6.7 to 4.6, it doesn't mean that prices have stopped going up. They are still going up. They're just going up and in much lower rate than they were this time last year, and certainly over the course of the last month or so. So those are a couple of things to really make sure that we pay attention to. First and foremost, let's deal with the latter first. Where are we seeing further increases in terms of prices right now? And I'm going to share my screen quickly because this is an interesting chart that is actually with Sky right now. So they're still saying that actually prices when it comes to food are still increasing by 10.1%. And I think really that's where most people are going to be really feeling it, because if you've got a family, you've got kids to feed, your weekly shop is still costing you more money by 10.1%. Services are still going up 6.2%, goods 2.9%. And it's interesting to see the top 5 price rises here. And they may seem like nothing, right? I mean, sugar, 51% increase. Olive oil here, 50% increase. Frozen burgers, 30% increase. Onions, 30% increase. Chilled pot desserts, 25% increase. But the fact is, prices are still going up. Now, the hope is, I don't want to make this doom and gloom, because I think this is, generally speaking, actually really good news. It's really, really good news. We're heading in the right direction, because if you really think about the journey that we've been on, the big concern has been that if inflation continues to go up, what they are going to be forced to do is push the Bank of England base rate up even further. And that effectively means it's a disaster for property, for mortgage holders, for renters, the whole works. So this is really, really positive. Now, the cynical amongst us might say, well, maybe they've selected that certain things that go into the basket where what they use to measure inflation, and it's been manipulated. I'm not here to address those kind of sentiments or those kind of thoughts. I think you can interpret this in any way you essentially want. But I think generally speaking, this is really, really good news right now. But this is the bigger question. I kind of answered the question in the podcast on Monday. So if you've not watched that episode, go and listen to it. It's about 11 minutes long. It's really, really insightful. Got loads of little bits of information in there. What's going to happen to interest rates? That's going to be the big question, because now we've seen a significant drop in inflation this year. Our peak was 11.1%. We're now at 4.6%. So it's over half of a drop of the inflation rate. So what happens with interest rates? Because logic will tell you, if inflation is coming down, and they've used monetary policy interest rates to do that, with inflation coming down, you should be able to let your foot off the gas when it comes to interest rates. That's the logical thought. However, listening to what Andrew Bailey has been saying over the past 3 to 4 weeks, especially since the Bank of England base rate was held literally a few weeks ago at 5.25%, we are going to be seeing higher interest rates for much, much longer. So the forecast on trading economics has changed a little bit from when the last time we actually had a look, and their forecast, they're allowed to move. We were originally thinking that we would see interest rates stay at 5.25% until Q3 of 2024. Looking at this on Tuesday, the forecast is now that we'll see the Bank of England base rate stick at 5.25 until Q2 2024, with a potential reduction to 5% in Q3, and then we might see a sliding scale off. But one thing that is worthwhile just bearing in mind is that it is highly unlikely that even when we get to Q2 of 2024, and hopefully by then inflation is back down or closer to 2%, which is the target, it is very, very unlikely that the Monetary Policy Committee are just going to say, right, let's wrap down the interest rates significantly and do that within a quick period of time. Higher for longer means we're going to hold higher interest rates for a much, much longer time to ensure that the inflation rate starts to wilter through over the long term. And they're going to keep it high until that basically happens. In the clip that I played on the podcast on Monday, Andrew Bailey specifically said, we will continue to monitor interest rates. But even if further interest rates are not needed, we are not discussing lowering interest rates at this point in time. And I think that's important for anyone who is looking for a property right now, first-time buyers, you're looking to remortgage, you're looking to perhaps move from your home to buy a new home. If you're waiting for interest rates to come down, it is very, very unlikely, highly unlikely that you're going to see interest rates fall significantly unless there's some kind of competitive drive amongst the mortgage providers to drive down fixed rates and drive down mortgage rates, generally speaking. But we're not going to see any trigger or any stimulus catalyst from the Bank of England and the Monetary Policy Committee. That's one thing that I really want to make sure that we get clear in this video. But this is really, really good news. We're heading in the right direction. I think this is positive. My fear for today was we would see an increase in interest rate in inflation, which would have been disastrous. It would have meant that I honestly would not know how they would be able to remain steadfast at 5.25% with the bank rate. I don't know how they would have been able to do that. So this is really positive news at this point in time. Let's just hope that as we head into Christmas 2024, we start to move in the right direction to get back to our target. We really need to be at 2%. The quicker we're able to get there, the better it's going to be. So I'm just looking at your guys' chats right here. I don't want to end this too long. Like I said, I'm in Cannes at the moment. We're in Monaco at the moment. We're supposed to be driving over to Cannes. And I've just said to the boys, look, I've got to do this really, really quickly. I've also got a few things that I need to do this afternoon in terms of some footage as well. So let me just see what you guys are saying. Darren is just asking here, we'll have to watch when on a break, Pete, as I'm due to start work at 11:30. Yes, this will be available on replay. Ada is saying here as well. I simply don't believe that this is true. I'd be interested to see the analysis. I know people's personal rate of inflation will vary. Yes, that is true. So when you look at the CPI numbers, they are looking at what a basket of goods basically costs. Individuals will feel this very, very differently, and it will be felt differently because everybody earns different levels of income, right? So you might be paying, I don't know, £2 for a pint of milk. You're going to feel that if you're on a lower income. So personally speaking, your own personal rate of inflation will be very, very different to these numbers. But the big thing, like I've already highlighted, is the fact that food prices is probably where most people are going to feel it the most. But it's easy to forget that inflation is a compound effect. The prices tend not to go down. They just go up less fast. That's true. Drop the base rate and we have a reverse market crash. I would agree with that as well. I'm going to be doing a video on selecting bonds, because one thing that happens when you have higher interest rates is that, bonds become more attractive. So how do you select a bond? That's going to be a video that will be coming out in a couple of weeks' time. I'm still working on it at this point in time. Okay, cool. I've gone through all the comments here. Jedamel, welcome. Thank you very much. Yes, I will enjoy it. I'm here until Sunday, basically, and it's beautiful out here. I've never been to Monaco before. It's stunning. It's really, really nice. So I will enjoy the trip as much as I can. Okay, cool. So you got the breakdown here. Please do me a favor. If you've got value from this, please like the video. It just means that other people who may be searching for an explanation of what's happened today will also be recommended this video by the YouTube algorithm. It takes 1 second. I know it can be annoying when you hear YouTubers ask, but it is really important for the growth of the channel. I just want to say welcome to everyone who has joined the channel over the past month. We've had quite a few joiners. So thank you for subscribing. Thank you for your time. But guys, enjoy the rest of your day. I'll provide a little bit more commentary a bit later on. If you've not seen the short that I posted this morning, next week is also going to be pretty big. November 22nd is my birthday. It's also autumn statement time. And if they reform ISAs like they're saying, go watch the short. This will be good news for everybody, particularly first-time buyers as well. So go check that out, but I'll catch you later on. Enjoy the rest of your day. Cheers.